Hello everyone, my name is Vince Valenti and I am the President of Independent Planner Group. We are a mutual fund dealer across Canada and a managing general agency for life insurance, disability, and other forms of insurance like critical illness. The topic for today is succession planning for financial advisors. As financial advisors, you are so busy looking after the needs of your clients and helping them with their retirement needs and estate needs and other needs, but rarely do a number of us look after our own needs. As an example, one of the things that advisors are not very good at is planning for the inevitable or the unexpected death or disability. If something like that was to happen to a financial advisor that is licensed for securities, licensed for life insurance, it would be very difficult for the beneficiaries of that advisor to continue receiving income, in other words commissions, based on or from that advisor's book. And the reason being is that dealers cannot pay an unlicensed individual commissions. They can hold them in abeyance, and until something is done, which could take several weeks or several months, then the commissions can be paid out at that time. We had a situation not that long ago where a 46-year-old advisor died unexpectedly of a heart attack. This was a tragic situation, of course completely unexpected, and the family members were questioning, how do we get income from this individual that was the sole and one of the main breadwinners of this particular family. A very difficult situation when you have to tell the beneficiaries, the spouse, that you cannot pay commissions. So we've come up with a very simple strategy that we think every advisor should follow, and that strategy is called a contingency agreement. It's very, very simple. What you do is that you find an advisor that is like-minded, someone that you think you would be happy to step in and look after your clients if something was to happen to you, and the two of you sign an agreement. This contingency agreement basically states that if something happens to either party, that the other party, surviving party, will step in and take over the book and buy the book at a predetermined price. So you can state what the acceptable valuations might be, taking a lot of guesswork out of it for your executors and for your beneficiaries. Again, another situation that we have is that executors tend to not be properly versed in our industry valuations and in various industry knowledge, and so an executor could be taken advantage of by perhaps selling a book for much less than they really should. So again, a contingency agreement, takes that guesswork out. Once that is signed, we strongly suggest that the advisors put that agreement with their will in their safety deposit box or somewhere that their executor can easily get their hands on it, so that immediately following the whether it's a death or disability, that the executor has somewhere to go to and has someone to talk to. It makes a big difference. Now, we are going to provide instructions on how you can download a sample contingency agreement. I must warn you that this was a homemade contingency agreement. I strongly suggest that you do get your own independent legal advice, and it certainly would be money well spent and time well spent. So, but this is a sample that will provide you at least with something to go on immediately and to give you some ideas on how it would work. So, so folks, for today, think about a contingency agreement. You do not have to sell your business. All you're doing is that you're protecting your business, your beneficiaries, and your loved ones in the event of an untimely and unexpected death or debilitating disability. Thank you very much for listening, and please come back and view our other videos on succession planning, and we hope that you'll get some benefit from these. Thank you for listening.